Welcome to this episode of ACG's Growth TV. I'm Carolyn Vallejo, and I'm here today with Whit Matthews, Senior Investment Director at abrdn. And he's here with me to talk about the evolution of private equity fundraising. Now, abrdn focuses prominently on the lower middle market, so I would love to first hear about the current state of fundraising today.
Yeah, for sure. Thanks for the question. Thank you for having me. I think if we reflect on the last 12 months, probably up until about 4 weeks ago, things have been up and to the right for a while now. In a normal cycle, where we'd see plus or minus 200 funds in the market at any given period, over the trailing 12-month period, we're kind of north of 300, close to 350. Like you said, we're focused on the lower middle market. So by definition, we're spending a lot of time with first-time managers and emerging managers. I think that's a trend that we've seen kind of increase and grow throughout the pandemic period, where we've all been sitting behind Zooms. And we think that's great. We think there's lots of really interesting, well-trained kind of individuals spinning out of well-known groups. And so the market has been kind of on fire, which has been great for everybody in this room here at Intergrowth. Obviously we're going through some type of dislocation as we sit here today, and I think it's certainly still to be determined kind of where everything falls out. It does feel like the world is slowing a little bit, but we've really only got kind of a 4-week reference point at this stage, and so we'll see where things go longer term. I think one of the things that keeps me optimistic, and I guess I'm optimistic by nature, is that this has just been a pretty resilient, part of the ecosystem, certainly part of the private equity ecosystem. And so, I think even if we do have a slowdown, we continue to think that the lower middle market is a great spot to be operating. Right, there's always going to be small businesses, founder-owned businesses, entrepreneur-owned businesses. They're going to need private equity resources and private equity capital. And so we're very optimistic. But to your question, fundraising has really been on fire for a long time now. And we'll see if it slows down a little bit here, but still early days in terms of figuring out what the direction of travel is.
So there is so much to talk about what's going on today, but when you look back over, say, 2 years or so, what have you seen change?
Yeah, so maybe a couple things. I think the independent sponsor kind of ecosystem continues to grow and continues to evolve. And for us, we think that's another interesting way to kind of play the lower middle market. And we've partnered with a lot of really interesting individuals who are either independent sponsors for life or independent sponsors for a little bit on their path to raising more traditional funds. The rise of kind of the continuation vehicle and the single asset GP-led secondary is probably the most notable kind of evolution in the private equity market from a fundraising standpoint. We think it's a really interesting way to play single asset or kind of small asset opportunities. Not every continuation vehicle is a good investment opportunity, but we think there's lots of really interesting opportunities, especially where we find the GPs kind of aligned with us as LPs, and specifically where we find a lower middle market GP who wants to stay with some of their best assets for longer. So if we find GPs who are aligned, who aren't taking capital off the table, and who want to stick with an asset that they've known for a little while for longer, we think that dynamic is really interesting. So we've been spending a lot of time on those types of opportunities. It's interesting. There's a little bit of a disintermediation of the middle market going on, where some of these really great lower middle market managers do want to stay with these assets for a little bit longer. And so we'll see how that continues to evolve. Obviously, the banker community has been out there talking to everybody in the GP world, and so we've seen a lot of these. I think we'll continue to see a lot of these. At some point, maybe that slows down a little bit. But we think it's another really interesting way to play either single asset or concentrated asset portfolios.
You mentioned the independent sponsor ecosystem.
Yeah.
That's something that I think is really interesting as well. Can you talk a little bit more about the evolution there and whether or not you expect that ecosystem to continue to grow and evolve moving forward?
Yeah. So I think if you went back 3, 4, 5 years, they used the term unfunded sponsor, right? And if you ask any of these independent sponsors, they hated that term. I think as somebody said, we didn't want our business card to tell the people we're trying to buy assets from that we don't have capital in hand. There was a belief, or there had been a belief for a long time, that if you couldn't raise a fund, there was a reason you couldn't raise a fund. And so I think the independent sponsor ecosystem for a long time was not getting maybe the recognition that it deserved. our observation has been that there's a lot of really well-trained individuals, investors who are coming out of, pretty well-known GPs and want to go out there and do their own thing, hang their own shingle. They haven't rung the bell. And so we think that dynamic is fascinating. Now, to be clear, there's lots of folks that call themselves independent sponsors that aren't necessarily that traditional GP model. And so we're not going to partner with all of them. We don't think they're all kind of institutional and backable. We maintain a database of independent sponsors at Aberdeen that was less than 50 when we really kind of leaned into this world 5+ years ago. Today that database is 450 plus groups that are out there and they're doing deals. So for us, it's a really important part of the ecosystem. We think it's just one other way to play lower middle market investing. We're active both as co-investors and as fund investors. So if I put on my co-investor hat, that independent sponsor ecosystem is just another way to see great lower middle market deal flow. If I put on my fund investor hat, it's a great way to get to know groups that may go down that path of raising the next great fund or firm and become a well-known GP down the line. So, to your question in terms of how does it evolve, does it keep growing the way it has? I think it does, right? The private equity ecosystem has grown by a lot. There's lots of individuals that don't necessarily want to be a junior partner at a bigger firm. There are a lot of ambitious people in this world. And so we think you're going to continue to see, really smart, well-trained individuals that want to go out there and do their own thing.
Wonderful. Well, there's a lot to keep your eye on, but thank you so much for taking the time to share some of those insights with us.
Awesome. Thanks so much. Appreciate it.
Thank you for watching Growth TV. I'm Carolyn Vallejo.